What's going on YouTube? In less than 10 minutes, I'm going to give you a full breakdown on the easiest price action candle pattern, which you could have used here on gold this past week to catch the breakouts to the upside. Before we get started, I just want to say this isn't no ICT, FVG, imbalance, order block, Judas swing candle pattern. Trading does not have to be that complicated, and I'm going to show you how simple it can be. First off, I'm going to do some very basic technical analysis, and I believe every strategy or entry model should be used in confluence with the very basics such as overall trend, market structure, and key levels. So starting on the daily chart, if we just zoom out, we can clearly see gold has been pushing to the upside for quite some time now. We've been creating this bullish market structure, higher lows, higher highs, higher lows, higher highs. So very simple, right? We've established that the overall trend and market structure on gold from the daily time frame is bullish. But I want to zoom in a little bit closer and look at the most recent price action and structure and take a look at this pullback here, which happened most recently after gold's push to the upside, and we saw this correction in the market. After the correction, gold started to consolidate here. Now, this is going to be a lot more obvious on the lower time frames, but you can actually see it from the daily within these three candles moving sideways, not really breaking the highs or lows of the previous candles. This is what led us to the all-important candle pattern, and the reason why you're here, the inside bar candle. This is when a candle does not break the highs or lows of the previous candle, which of course is what we saw right here, and often indicates indecision in the market. Now, taking into a consideration our basic analysis that we did, the market is in an overall uptrend and we are currently in a correction phase. You would anticipate once price breaks this inside bar candle high, that could lead to a continuation based on this overall trend and market structure. Now comes the interesting part. I have marked out the high and low of this inside bar daily candle, and I'm going to jump down to the 4-hour time frame, and we're going to see here that we actually start to get this same price action and this same candle pattern on the 4-hour time frame in terms of inside bar. In this instance, we are closing bullish, aligning with our overall analysis from the higher time frames that we did previously. So here we have an inside bar candle, and I'm just going to mark that out again on the 4-hour time frame. And again, we can anticipate the same thing now. We have our analysis, we have our bias from the daily in terms of overall bullish momentum and market structure. We have a daily inside bar candle. Now we're chopping down the time frames and trying to get the analysis to align. And again, you could start doing some very simple and basic price action analysis to get a potential better entry and wait for price to align with the daily. For example, drawing a trend line and waiting for the break, using market structure such as lows, lower highs, higher lows, a higher high, potential higher lows here now to drive up with the inside bar 4-hour bullish candle and create new higher highs based on this previous bullish market structure. So just to recap, so it doesn't start getting confusing, we have marked out our daily inside bar high, our daily inside bar low, our 4-hour inside bar high, and our 4-hour inside bar low. But it doesn't stop there. I've now dropped down onto the 1-hour time frame to find a more precise entry. If you guys know me, you know I'm all about precise entries. I want to get into this move before it's happened, not as it's happening or after it's happened. So now let's focus on the entry. Here we have our 1-hour inside bar candle because it did not break the highs or lows of the previous 1-hour candle. Now let's talk about a very simple entry. We have our inside bar candle. We actually manipulate the lows here to grab liquidity before pushing up and closing above the inside bar highs. This could be considered now your inside bar breakout. And like I said at the start of the video, a breakout from an inside bar candle can trigger a very aggressive high volume move. Your entry criteria has now been triggered with the 1-hour breakout, anticipating for it to break the 4-hour breakout, and you would set your buy stop a few pips above that 4-hour inside bar high. So when it does start breaking, you know potentially you're going to have an aggressive high volume move. Your first targets could be the inside bar daily candle high. And again, once price breaks that high, you would anticipate even more volume to come into the market. And then you could potentially even target previous highs over here, or all-time highs in this case, around about 3,060. Let's see how it plays out. And there is that aggressive volume coming in on the break of those 4-hour inside bar candle, just like we talked about previously. But now tapping into the daily, let's see if we can get even more aggressive volume coming in with the break of these highs to see if we can get that extended push to the upside. So there we go. We can see that once price did spike those inside bar candle daily highs, we did get short-term pullbacks, and this could be due to retail traders stop losses being taken out above this daily candle high, for them potentially anticipating that it can continue bearish. But once we did close back above, we can see the aggressive bullish volume coming into the market here, driving price all the way up into all-time highs and breaking them actually to continue. This was a beautiful 1-to-7 risk reward ratio trade targeting those previous all-time highs. But if you did let it play out, you can see that it did actually continue breaking those all-time highs and creating new all-time highs this week around about the 3085 mark. So that concludes the video. And just as I promised at the beginning, a very easy and simple approach to price action trading without all the nonsense of FVGs, imbalance, order blocks, retracements, Fibonacci's, support and resistance, engulfing candles, Judas swing, whatever you want to call it. A very simple strategy using very basic technical analysis such as overall market trend and structure, and then an entry model which gives you precise lower time frame entries based on higher time frame analysis, which is always, best in trading, I believe, giving you very nice risk to reward ratio trades and enabling you to take advantage of the high volume aggressive moves on gold, in this instance to the upside this week, creating new all-time highs. Before we go, if you're interested in learning how I trade and how to trade price action the easy, simple way with me and my team, I actually trade live every single day in my Discord, calling out all my trades with real-time commentary, exact entries, buy stops, take profits, stop losses, right here in the signal channel and also on the live streams. And the results speak for themselves. Some of the traders in my group are now just fully independent and have learned the process, have learned the strategies, and are trading by themselves even on the weekend here on Bitcoin, as well as other different CFDs and commodities and cryptocurrencies, gold mainly, but we do have some other pairs that we throw in there every now and then. So yeah, if you want to come join us, like I said, link down below, leave your comments on what you thought about this video if you have any questions. If you want to join the free Discord as well, the link will be down below, and I'll see you guys in the next video.